Hey, good morning, everyone. Welcome. Hi, guys. Hi, Patrick. And today we have a special guest. Welcome, Scott. Thank you for being here. And today is about Bookmap and MenthorQ, and we're going to show you some examples. But before we do that, let's go over a very quick disclaimer, and then I'll pass it on to you, Scott, to introduce yourself and share your experience.
Okay.
All right. So welcome again. And so Scott, I'll pass it on to you. So we've been like really kind of connected, maybe like a month and a half or just less than that. And I know you're using obviously the levels for your trading, but it would be great to have kind of like your background, and then maybe we share your screen and we go over some examples.
Yeah, absolutely. Thanks for having me. Yeah, we met about a month and a half ago, and we were introduced by a friend of both of ours. And as soon as I saw your levels, I was pretty amazed, especially with, as you're going to see with what I'm doing, they just work in conjunction beautifully. But my background is I used to be, I've been trading for about 25 years now, futures trader, and I used to be a very large scalper in the E-mini S&P. I was actually one of the biggest in the world at one time. I would average every day about 50,000 round turns, and back then the ES was only trading about 500,000 in a day. So I was 10% of the world volume every single day. That's how active I was, and worked great for years. Made millions of dollars for myself and my firm, and then overnight, one day, it just disappeared as far as that method of trading, like a lot of methods do, right? So back then it was the very low volatility. It was like historic low volatility. This is like mid 2000s, 2005, 2006. Coupled with the algorithms were starting to take hold in the market, and I could not. I mean, I was one of the fastest clickers on the planet, and I could not compete with these algorithms as far as scalping. So then I tried to reinvent my style over years and years, and I wish I would have had the stuff back then, both Bookmap and the MenthorQ levels. I wouldn't have been knocked out of the game. But in 2013, I could not. I mean, I was at best an average trader at best. I couldn't, I had a family and 2 little girls, and I had to literally leave the business because I just couldn't make money anymore. And then fast forward a few years, 2017, 2018, Dr. Brett Steenbarger, he's actually one of the top trading psychologists in the world. He was actually at my firm when I was making all the money, and he sat behind me. He asked if he could sit behind me to see what made me, elite at the time. And he wrote a book called Enhancing Trader Performance that I'm in, throughout the book and afterward. But he called me fast forward to 2018 and told me, because he had watched me trade before as far as my scalping, and he said, you want to check out this Bookmap platform? It reminds me of how you used to view the market action. And the minute I saw Bookmap, and this is before all the stuff I'm going to show you today, this is just the basic heat map. This is again 2018. I was like, I'm back. Like I can compete with this information. So Bookmap is the core of my trading, and the SI indicator. We'll get into that. But anyway, so I got back in the business, and then started to. I was asked by another trade room to be an educator. I've done over 1,000 Bookmap webinars since 2018, or probably not that many, probably 500 or 700. But the point is, like, I educate now and trade, and I have my own trade room where I do the same thing that I'll be showing you. We actually caught some of these trades today that I'll be showing you, but that's where I am now in my career.
Yeah, that's great. And so today what we're gonna do is we're gonna go over kind of like how you are using kind of your Bookmap platform together with obviously the MenthorQ levels as well, and then showing us some example on how you actually read the platform. Obviously, we had a webinar last week on Bookmap, and for newer trader, it's a complete different visualization. So it might be overwhelming at the beginning, but I think it's very powerful. So maybe if you can share like best practices on how a new trader should look at this platform and how you can really get the power of it, would be awesome.
Yeah, I mean, what you need, before the MenthorQ levels, you obviously need the Bookmap basic software. And there's a link on my website, scalpelcitytrader.com. bookmap.com. You can get discounts to the Bookmap basic software. And then you also need, and I'll be showing this as well, some of this stuff on the for the MenthorQ stuff. But if you go to the Bookmap marketplace, then you want to get the add-on. So you need the MBO bundle to get this information I'll be showing you. So the CME came out a few years ago, and they offered this. Hold on here. Sorry, I meant to have this already up for you. They have this enhanced data now. It's not now. It's been around for about 7 years, 7, 8 years. It's called market by order data, right? So it's enhanced data that shows you not only every level in the order book. So, you know, most people don't even realize in the order book that you're looking at, if you're not using Rhythmic, I think there's maybe one other one that has the I think Bookmap data has it now too, the MBO data. But if you're not using it, like when you pull up a dome depth of market, all these orders are basically fake outside the first 10 price levels up and down, right? So they're not real orders. So that's one of the things that Bookmap or the MBO shows you, is it shows you every order in the order book. So it helps you judge like liquidity areas, which are normally magnets. It's the big money. I'll talk about like why in the games I used to play as the big money. You don't see a lot in here in the ES today, but it shows you that. But more importantly, it shows you the iceberg orders, which are hidden orders that the big money put in the marketplace, where, because nowadays with these algos, like I was talking about, how algos knocked me out of the game at the time, you know, these algos, you can see this order book, right? So this is NASDAQ, there's NQ, there's not a lot in the order book in here. So if a big firm, for instance, this was a sell ice order, we'll get into this actual setup. This is 172 sell ice orders, right? So at the time, if this market came up here and some big firm dropped in 172 sell orders, these algos would run it away from it, trying to make this person chase, right? So that is the main reason that the big money uses iceberg orders. So all an iceberg order is they just have to flash, or they have to show a certain percentage of their main order in the order book. So I think it's 10%. It's changed from time to time. But so if they have 117, 172 to sell, all they have to show is 10% of that, right? So 17 lot. Someone comes in, they're like, oh, I'm going to sweep up these 17 lot, and then behind it is another 162 or 59, right? So the point is, it's like a hidden order until it gets straight into, and then it populates. So what the MBO data tells, and Bookmap has, found the best way to display this stuff. You can see it as clear as day in here, so hey, there's big money selling in here. I may want to, depending on the situation, I may want to join them, right? Especially, as I'm going to show you, at these MenthorQ levels. The other thing it shows are stop runs. So stop runs are usually, this is the yellow zone, and this is my zone drawer. I'll get into that. That's on the Bookmap marketplace as well. But stop runs are usually retail traders puking. The big money doesn't usually get out of their orders with stop runs. They have like this VWAP method, and they have other methods. They don't just dump their orders into the market, because one, a lot of times there's so much slippage. They would, if somebody had to come in here, a big money had to get out of 1,000 contracts. You can imagine if they just went to the market. I mean, they'd have to, especially they'd have to swipe up like 50 points here to get out of their trade. So the point is, when you see stop runs, that's information too, because it's not usually initiative, in this case, initiative buying, right? It's just guys puking. So that could be a good indication of a reversal, because these are stops. So if you're just looking at the order book and you're just watching this, or even the Bookmap without this information, you see all these blue bubbles, these blue buy bubbles, all these are our market orders. You're like, oh yeah, someone's really buying this. Someone's buying this. Well, when it's just stop runs, you're like, no, yeah, someone's buying it, because they're just peeking out of their positions. It's not necessarily initiative positions coming in the market. So when you know this information, it in itself, it's the best edge I've ever seen. It is the core of my trading, the stop iceberg information. But then when you apply this information at important areas, aka the MenthorQ levels in this instance, they are just absolutely dynamite. So again, that's the core of my trading for what we're going to be talking about here. But as far as the MenthorQ and getting this stuff, so I'm very new to the MenthorQ levels as far as bringing them in and everything. So it's actually probably a good way to learn, because I'm brand new at it too. But this is the way you bring them into the trading view. You just go to the MenthorQ bot. You're in the Discord, and you type in the those levels, and just quickly go over this. I'm sure you guys mostly know this, but if you go to their bot, you can come in here and this is the old method for doing it before the book map, and you type in what you want to see, blind spots and the regular levels, right? And then you copy those and you paste them in the trading view, and then they populate. You just go to indicators here and you click on MenthorQ levels. You're going to get all this with the subscription, right? And you bring this app, and then you put it in, and then your levels appear. So very recently, they've now gone to Bookmap, where they're all right on the Bookmap chart. So, when you look at this, your brain is probably scrambling because there's just so much on this chart. Once you understand what all this is, it's not, it doesn't bother me at all. But we have different trades that are based on these zones. And you can see the zone, these are reversion trades. These are our ATR lines, right? And then the stops. So I'm not going to get into all these different strategies that I do take, but the main thing you need to know from these charts are these volume event areas, and that's just all it is drawing. The zone drawer is drawing the volume event that happened, and then we have the MenthorQ levels right on the book map. So again, for some people, like there's a couple people in my trading view that's just too much for them, so they prefer to see them on trading view, which is fine. I got them on both just so I can just see them more clearly. But anyway, for the map integration, all you got to do is you need the price lines add-on. So you go to the Bookmap Marketplace, and it's not on the front page, so you just search add-on and price lines, and there it is there, right? So you got to download that. I believe Fabio's got a coupon code. They've been having a problem with the coupon code, so if you try to use it, you might not apply. You got to contact Bookmap support. I had a problem with it as well. So anyway, it's $50 off. You get it for $99, but you need this add-on to bring in these levels on your Bookmap chart. So then once you have that add-on, and it gives you the step-by-step how to get it set up, you come in here, you download it to your computer, you hit add, right? And then so right there, it'll be on your computer. You just double click it and bring it in, and then you add it, right? It's very simple. Then when you have that, then you have to, you got to go back to the MenthorQ website and get your API key, and it'll all be right there. Actually, I can even show it here real quick. Just see if it populates. If not, I don't have my login in front of me. But you guys will see. Fabio, you can talk more to that, but it shows you your API key. It's right in front of you. And you want to copy that, and you want to paste it in this MenthorQ integration, right? And I was having a problem with this right away too. I had picked for the frequency, I changed it to intraday because I thought that's what it needs to be. It's end of day. And he can talk more about what all these different things are, but I'm just saying to get started, this is what you need. You need your API key, your end of day, pick the gamma levels, and then you hit update levels, and it'll update, and it shows you the time it updates too. So he can talk more about this and like when you can update it throughout the day. But that's it. So then you bring them on, and they automatically populate into the chart, and they're beautiful, right? So that's how you do that.
And maybe Scott, I'll spend a couple of minutes just going through. So very, very simple. If you set up an account, you go on integration, and you get access to the Bookmap integration guide and the API key right here. With the integration guide, very, very simple. As Scott mentioned, you need price lines, which is an add-on, and then you have a coupon code right here. If it doesn't work, feel free to reach out to the Bookmap team or the Bookmap marketplace, and then basically you would really set it up. Everything would be there. The integration is there. We have levels which are end of day for futures and intraday for stocks and ETFs. So if you are using Bookmap for futures, then you would have not only the gamma levels, you would also have the blind spots levels directly imported there, and then excuse me, and then you can also use it for stocks and ETFs intraday as well.
Cool. So that's how you bring them in. And then, so with my trading, so again, the core of my trading is this stop iceberg information. So back to when the CME introduced this, again, this is my opinion, but I have a pretty detailed history with the CME, and I kind of understand how they work. They came out with this information about 7-8 years ago with this enhanced data. It's like, well, why would they do that, right? Because if you're big money, you don't want people seeing your iceberg orders, right? Like that's the whole point. You want the stuff hidden. I again, my opinion, I'm convinced that they came out with this information to 2015 to 2017. The retail trader was dying, right? These algos were just crushing retail traders. And I personally believe that they offered this information to the general public to kind of give us a fighting chance, honestly, the retail trader, right? Because, with this information, you just see so much more. If I was a big firm, I would be complaining about this. And again, this is my opinion. For example, in the currencies, the icebergs just all of a sudden disappeared. Like you can't get them on currencies anymore. I believe enough big banks complained that they didn't want that information out there, and the CME pulled it. Could the CME pull this information? Maybe. I think it's too big now, too big to rig, if you will. I don't think they would pull it, but you never know, right? So take advantage of it while it's here to get this kind of information. So anyway, you get this enhanced information. It is by far the best edge I've ever seen in my 25 years of trading, right? So, gamma levels are incredible. These other areas I look at are incredible. That's why I use them. But I don't care what you're looking at on a chart. It doesn't mean much unless you're getting real-time volume. That's what drives markets, not lines on a chart. Real-time volume drives markets. If you get your areas, your important areas, and then you demand to see a certain volume activity in those areas, that's where the edge comes from, right? That's the best edge you can ever have in trading, in my opinion, right? So again, you can glean stuff by market orders, so on and so forth, but the best, most reliable edge that I've ever seen are these stop iceberg events, right? So now when you apply these events at important levels, now you have yourself a real edge with rules, so on and so forth. So I can get into, so before I get into this, so as far as the zone drawer, you can also get this on the Bookmap Marketplace. It's right here at the top here. Let's see, sorry. So, and this, as far as my method of trading, you can also get that. I have a course on here too. You can get it on my website as well. You can understand the setups that I do take off of these stop iceberg events. I have distinct rules, so on and so forth. That's the course. But if then you have the zone drawer here. So you need this add-on to draw these zones. So you can draw these zones manually, right? And I did this, if you watched any of my webinars in the last 8 years, I used to have to draw these things manually, right? So it's very time consuming, especially for this trade. I'm going to show you this GEX trade at these levels that we have. It's a very fast a lot of times where you want it, it's an auto entry trade, meaning I get in right in the middle of the event, because I have different methods of getting into these depending on what happens. We'll go over that. But you want to have that information, or you want, the zone drawer draws it automatically for you. Other than that, you would have to go to this edit tool. You hit horizontal line. So you have to hit that, then you have to go to horizontal line, and then you draw the line, and then you got to go back to edit. You got to, so it's just a huge, huge pain in the, what. Let me get rid of that. No, I'm glad it didn't take out my zone drawer. So this draws them automatically for you. It is a breath of fresh air, put it that way. And it saves me hours off of my life, or back into my life. What else is on this zone drawing tool are ATR lines, right? So I've determined, based on these volume events, the best way to determine if they're a bullish or bearish event is if the market can push a 5-minute while there's ATR out of the zone, and that gives you a better indication on what's going on with the volume event. Up until very recently, MenthorQ levels, I would demand the move out, and I know that affects R. I'm fully aware of R, risk reward, right? And a lot of traders, a lot of good traders say, you hurt your risk reward when you're waiting for confirmation of areas. And I agree. But again, this is from trading thousands and thousands of these over the last 8 years. I've determined the best way for most of my strategies is to wait for the market to push not only an ATR, just outside of an ATR, and that's what the yellow line is, for entries. So for instance, I did get short a couple of my traditional strategies at this ATR line. When this happened, I waited for this to move out. So that's what I demand for most of my strategies. There are strategies, and this is the beauty of the MenthorQ levels. I have a strategy. And so when I'm talking about strategies, all they are areas that I look for these volume events, right? So you can see my trading strategy document here. So these are all my position trading strategies. So, I'm looking for a stop run on a Ludwig level. We'll talk about those a little bit. An inflection zone, all these different areas. And you get down here, And these are auto fade strategies, meaning the minute you hear the stop iceberg event, you're jumping in right in the middle of the zone. You're not waiting for the confirmation out. TikTok, that's just an extreme tick reading. We're not going to get into that, but here's this trade I used with the MenthorQ levels called Sexy Gexy. And you can see a lot of these trades are funny names, right? Like Izzy's and Barks and Dada. So it's meant to be a memorable name, Sexy Gexy, right? So take any fade trade into a spot gamma MenthorQ gamma level. Trade is taken immediately when an opposing SI event fires off. So market moving higher with a buy stop run into sell or sell iceberg. So that was this example, right? So we're moving into a resistance area. So what we got here was sell ice. So we got the sell ice. That's that. And we got buy stops. So I have a distinct name for this pattern. It's called the double whammy. You have the dumb money puke into the waiting hands of the big money sell ice, right? So that in itself is an edge, an incredible area to be trading if you want to go short, for instance, if it's one of your areas. When you combine that with, you can see these two MenthorQ levels, we had a blind spot and the gamma wall. I got, and this was on my trading webinar. We took this trade on my webinar this morning. I got in right in the middle. Normally, again, I put on position trades at this level, but I got in here. You can see that was almost a full 40-point difference from where I got in of this trade. So on this one, I got out of some of them when it did hit the ATR because, so here's the thing, right? So at these levels, dealers are going to be hedging their positions. Does that mean that every time it touches one of these levels, it's going to react? No, because there's other players in the market many, many times, right? Okay, in this case, there was big money here. So sometimes it'll hit these levels, and I'm going to show you a couple instances where it just keeps going through. And that's where traders are struggling. If you are using MenthorQ or any of these, or any areas, for instance, like, well, what's going to make, why should it stop at this point? Why does it stop here? And then other times it doesn't. Well, I'll give you my best guess. It's not a guess, but it's my best reasoning for why some blow through and some hold, right? So if you see, for instance, this comes up to this level and you see heavy relative volume, that means there's other players playing right then, right? So yes, the dealers are hedging here. Does that mean the dealers are the only game in town? Sometimes, most times, yes, right? 80% of the time, big money's not in here. And it's just algos and dealers hedging their options. The other 20%, there's big money in here and it could blow through. So this is a great example from this morning in natural gas where this market moved down into the, you can't really see it here. This was the GEX 1, which is the most powerful here. You can't see the label here, but this is what I look for, right? So you moved into the GEX 1 here. Again, I can't see the label, but here you can probably see it on TradingView a little better. This is why I have them both up. Let's see, I should have it here. Yeah, so this was this morning. The market had gapped down right in the GEX 1 and ripped right through it. And I actually took a loss in this trade because the Sexy Gexy trade is relatively new, right? And I'm still formulating the rules. I've offered it to my room and the general public, like on these webinars, because it's such a strong trade, even though I don't have the rules down exactly. But I'm learning the hard way that you want to be careful with these.
Stop, sell, NQ.
Okay, we might have a live trader. I'll come back here. But if you're seeing heavy relative volume, there's other players. You might want to not just jump in trades aggressively at these levels. So let's just take a look here real time what's going on. So we have stop runs at a level. So this is another thing, like I'm in the process of learning, right? So yes, this is the GEX 1. It's a powerful level, but it's already traveled through it and back up and through it. So these are, I'm assuming, again, and Fabio can speak better to this, and this is one of my questions for him because I'm just learning these levels as well. Is it the best trades the first tag into them and then, or are you okay taking them if it keeps coming back, things like that? So for instance, this is a stop run right into a volume event right into the sketch, but it's already kind of traded through here. So what's your opinion on that, Fabio? Would you say you'd be more hesitant to take this, even just say you're not even using the stop iceberg events? Are you more hesitant to take it if it's doing this, or is it the best ones when it moves straight into them?
So I think, it really depends. Those are what we call market reaction zones. So the outcome is that it could become an inflection point, like you saw the break of the GEX 1 before in your example, but it could also be a pinning level that, like you see there, where is trying to break, then comes back, then tries to break again. So it's kind of like, this edging activity kind of keeps going back to that area. And always look at them in areas, not at the actual like tick level. So it's like important areas, but like, there is slippage, as you mentioned. There is maybe like people that are following big orders, and obviously that causes the price to drop back. But yeah, those are like kind of like reaction zones. So I would use them in that way.
Right. All right. So I'm gonna actually trade. I'll trade this area, right? So I'm going long at this level because there's back-to-back stop runs, right? So the beauty of these levels, one, the dealers are hedging here, but then when you get the volume event, there's even more concentrated volume in this area. So this is kind of odd, especially this time of day where you got 3 stop runs into this thing, right? So again, this is usually traders puking out their positions, and in this area, it's kind of weird because it's already traded through here. Again, this is a weird situation of what's going on as far as these stop runs, but this is what you would look for, and this is what happened earlier. Let me get my stop in right now, and we'll go over. I had a question on this earlier, like how much do I give it as far as the risk reward, right? So this is the drawing tool. I'll get into this, but this is where I'm risking to if I'm wrong on this trade. So 68.75. So let me put that in case this does both here. So the other thing too, what I've been noticing, if you do take a loss at these levels, it's telling you something, right? So if it just blows through here with a volume event and it just keeps going, there's something bigger usually going on, right? So even if you take a loss, you're like, okay, now I'm ready to go short on maybe a retest, so on and so forth. But it's giving you information. And this goes for any trading area. If a trading area doesn't work, that's giving you information. You may take a loss, but you use that information going forward, right? So anyway, I took this. Again, this is not the normal entry that I would take this because it was bouncing around here. So go back to this one. Again, this was absolutely gorgeous. This thing moved into this level. It did bounce once, came back, and then the sell ice came in and the buy stops. So I jumped in right here and caught this move. This was like a 50, 60 point trade. I put 2 on. I got out of 1 at the ATR, and I got another one in this prior event. So these are areas that I dropped, and even went further than that. But the beauty about these is because I know some guys, like, for instance, Jordan, he introduced me to MenthorQ. He's a trader in my trade room. He takes these, and he's got a set amount of points that he'll get out, right? Like I think he gets out. He takes up 40 ticks. He's risking 60 ticks to make 40 ticks. Well, that's a little arbitrary. It's not. That's kind of him imposing his will on the market as far as, well, why 40 ticks? Why not 70 ticks? Why not 8 ticks? With this stuff, it's a better way to judge these, how far, because of all my experience of how these markets react at these ATR levels. A good rule of thumb that I'm using right now, and again, this is still a trade in progress for me, is I'll jump in. So on the trading webinar today, I jumped in on this trade, right? And I took it, and I got out of 1 right in front of the ATR because I know the propensity for these markets to rip back to the zone at these ATRs. We actually have a trade for that too. So I got out of 1 here, and then I got out of 1 at the 3 ATR, which was right into this volume event, or 2 ATRs, one of the 2, but it was into the volume event because these are areas, you got to remember, these volume events are where traders are caught. A lot of traders are caught, right? So especially, for instance, look at this buying here. See these blue bubbles? It's hard to see in this black zone. But the point is, traders that were buying aggressively here that ran into a mouthful of sell ice and starts running away, you're going to get a reaction from them too. So that's why using these MenthorQ levels, you already know dealers are going to be hedging, right? So it should be some kind of counter flow. But then all right, I stopped out of that sexy gexy on that one. And that, again, that was a weird situation. It was back and forth. But the point is, when you get these areas, you already know dealers are hedging, and then you get the added, flow, or we call puking for these buyers that were wrong here. That helps propel it too. So that's why I demand in any of my areas, not just MenthorQ, I demand a stop event, or a SI event, stop iceberg event at the level. Right. So the way I'm trading these right now, Patrick had a question earlier. He's like, okay, when you get in these, how much are you risking? Well, for my position trades, so I am short NASDAQ, the Izzy and a pick trade. We can go over those, but those are the position trades I take, right? So I wait. This is the confirmation where I wait for it to get the ATR out of there, just outside the ATR. So when I enter this trade, my entry goes here and my stop is on the other side of the zone. Why do I do that? And I know people are just grumbling, oh my God, the R for that. You're waiting for this thing to move 50 points out of there before you enter. Yes, because I've learned, again, this is not just me guessing the best way to enter is from trading thousands of these. The best way to avoid the algo nonsense is to let this thing push an ATR before you get in out of it. And if I'm going to be wrong on this trade, this position trade that I'm still in, I'm forcing it to come back the ATR. I'm forcing it to plow through a volume event that I know buyers were caught and with their pants down. And as it comes back, it's how many traders that got long in here are still holding on, hoping it comes back. And when it comes back, they get out. And how do I know this? Because this is what I used to do as a large trader. If I would get loaded up, I'd be buying, think it was going to go up, and it does that. I have my puke point, right? I have my finger on the trigger to puke, but I'm praying to the Lord Almighty that it comes back saying, I promise I'll never do this again. I promise I'll never do this again. Just let me out of this trade, right? That's what's happening. So for me to be wrong on a position trading short, this is not the sexy Gexy trade. This is the position trading. I'm forcing it to come back all the way through an ATR, through the volume event, and push another ATR out. That's where I get out. For the sexy Gexy, I still use this as my exit, but I'm entering right smack dab in the middle of the zone. This is an auto entry trade, right? Because dealers are going to be hedging. So I don't demand that, but I still will exit. I will force this market to push an ATR plus to be stopped out of the trade. So that's the answer, Patrick. If you have the zone drawing tool, but you can eyeball too the 5-minute ATR. I have a spreadsheet for this too. Before we had the zone drawing tool, I actually have a spreadsheet where you would plug in the zones, and you get this as part of my trade room as well if you don't want the zone drawer. But you literally just come in here and you put in the zone where it happened, the current ATR, and this tells you exactly where you go short and where you stop out, or where you go long and where you stop out. So this spreadsheet is the zone drawer tool that you're looking at, right? So that's how I judge where I'm getting out of this trade. So when I put this trade on, I put my stop up here. It was an awesome winner. So this one, again.
That's a really good way, yeah.
Did you say something there? Sorry.
Yeah, that's a really good way to do it. Yeah, I like it. So personally, what I was figuring out when it came to the MenthorQ levels, and you want to take a trade, a safety trade, I think like it's between 12.5 and 20 points far away from the level before you should go in. So for instance, as you want to say, if you want to go long and this trade was not working on the gamma wall today, so you should place your long above 12.5 points away from the level. So not directly on the level, not a breakout. Wait until we're going through this level with strong momentum, and then you can go long maybe.
Right.
So this is something what I was observing since I'm using this, having a wider area where you go in. So 12.5 to 20 points difference between the levels for long or short. And then it becomes a much safer, and you get not the crazy slippage around this.
Right. So my daughter's cat just wants to participate. But I highly recommend that you take this into consideration, whether you use the zone drawer or not. Using a static amount of loss or entry, like you said, 12.5 points, that's great for certain ATRs, right? When the ATR is between 15 and 25, I'd say that's fine. But when the ATR is spiking, right? So this is on Thinkorswim, but the ATR is on here as well. Actually, I can bring it up here. When the ATR is at a 35, if you're risking 12 points, you're very, very likely going to get stopped out of the trade, right? So you can see right now the ATR is at 25 points. So, I just get a kick out of traders that are like, when I put on NASDAQ trades, I love to risk 10 points to make 20. Well,
No, Scott. That's not what I mean. I mean,
no, I understand.
You go before you place your order. So, like for example, there are many people. We are now on the put support. We came to put support, and they're placing the long or the short order, depend on what I'm looking at, directly on the put support. And I think it's much better to wait 12 to 20 points above or below put support before you take the order, not directly on the zone. It makes no sense.
Right. But I'm saying, but once you get in, where's your stop at? Is what I'm saying. You're risking what, 12 points?
Oh, it's really depend on, as you want to say about the ATR, but I would say it's depend on the risk reward. If you have if you want to go long there and you have a really good upside, so then you can risk also something for the downside. But if you're going only for a few points, of course your stop loss should be also a few points. It's really depend on your trading setup.
Right. But again, you'll be a believer if you watch these long enough to help you with these levels. So if when you get this stuff, this is so clear cut where, like, if I'm going to enter this trade, and I'm going to wait for it. So I wouldn't get in front of this. So if it tags this, so the way I judge these, like I said, if this doesn't push an ATR out of here, this is still considered a bullish event for me, right? If it gets an ATR out, but this is a sexy Gexy trade. So I would wait for it to tag this. As long as it doesn't tag the ATR below, I would jump in. You could jump in right here. It's close enough to this put support. I want to see it on it, or at least the market tag it. But then you can get in here and then use this as your stop, right? So you will be amazed that if you force the market to push from these volume events, or even these levels, if you force the market to push an ATR plus a little bit, mine's ATR plus 15% of an ATR, that is a great rule of thumb, because you're adjusting to the current volatility in the market versus a static amount, right? So I know, for instance, Jordan he says, I like to risk 60 ticks to make 40. Well, right. Like I was just saying, 60 ticks is great when the ATR is between 10 and 25. When you get an ATR 40, 35, 40, 50, 60 ticks is nothing. You're going to get normally swiped out of it. So my advice to anyone that's not using the SI events is just using these levels, which is fine. Each his own. You want to just use the levels by themselves. I will bet you your success rate is much better if you force the market to push a 5-minute ATR, Wilder's ATR, outside of the area to stop yourself out, right? And then maybe take, your profit, take some off at a 5-minute ATR going the other way, or 2 ATR, 3 ATR. And that's what these lines are, these dotted lines are. But that's what I recommend, and that's what I do for my sexy Gexy trades, right? So I make sure.
Yeah, I love it. So
yeah. And it takes a lot of guesswork out, right? Because it's hard enough to put these trades on, be quick enough to put them on. Then you're wondering, where should I put my stop? I mean, it's all right here. So these yellow lines on the zone drawer are ATR plus 15%. So if I go long, that's my stop. If I go short, that's my stop, right? And again, for my position trades, I force these to get out of these. I wouldn't even be into this short in a normal, not a sexy Gexy, my other strategies. I get in there, and that's where my stop goes. If I go long, I get in there, that's where my stop goes. And again, it helps you avoid, as best as possible, the whipsaw action that happens in these markets, especially in Q, right? So I'm eyeballing this. And I like to combine these. So these are adjustable. Well, should be all right. Shouldn't talk too much. You could adjust these. So I'm just going to combine these because they were basically back to back, right? So that's the beauty of the zone drawer as well. So a trader in my trade room developed this thing. It's just, I'm so happy he figured this out, how to draw this information that's on the flip chart. So you got two different stop runs here. You got, again, it's just some weird activity here. This is more normal when you hit an area that hasn't been touched for a while. But this one up here was really weird because it was just out of nowhere. But anyway, you got stop run. I combine these two. Now what I'm going to do here, I'm a lot more confident in this CBXC because it hasn't, traded back and through it a bunch of times. So if this tags it, it's real close. I could take this trade, and I'm just going to risk to here. Here's another one. So this one, and then hold on, get in this puppy. All right, so I jumped in that right away. Okay, now my stop. You just heard new stops. You can combine these or use this. I'm just going to use this by itself. It's pretty much the same area. My stop for this is 24.50. So let me put that in. And then what I'm going to do here, if this pops out of here, so this is exactly what I look for. Is it didn't quite get here yet, though. That's the only thing that I'm a little nervous about. It didn't quite tag this, but I mean, you got stop run. If I get another one, I'll probably put more on. But if this pops out of here, I'm going to get out right in front of an ATR of one of them. I got two on, and I'll try to let one run. So the great thing about this is, you guys, or Jordan, he's scalping for quick scalps. Well, when you get volume events, this is we talked about this a little bit ago. This is like concentrated volume, so you may get an even bigger run out of here. Not only the daily reaction, now these guys that are loaded up in this area, helps propel this market even further away. So we'll see. We're probably getting another stop run. I'm getting really strange stops in the middle of the day, but it is what it is. So I'm long. I took the sexy Gexy here. If I get another one, I'll probably put on some more because it still hasn't tagged this exactly. And then here's my stop. And so this is the great thing. Like with the zone drawing tool, I know where I'm stopping. Like if this can push down through here, You say, great job. You were able to put it through here. Not only are these stop runs usually retail trader pukes. Here's another one.
183
A lot of puke in here. So this is basically the same zone. So I'm just going to keep this on, but you can see this is really, really strange activity for this time of day. Anyway, you got this one was, you see it down there in the lower left, 151. So that's the other thing too. I'm not just taking any stop run, right? I have what I call thresholds for each market that are meaningful to trade. So if I just saw like a 20 stop run, I'm not trading that. For NASDAQ, I've got to see 150 or more, and that's what the zone drawing tool does. Anything that's 150 or more, it automatically draws a zone. So this one was 150. This one was 184. This one was this one did touch the 150. That's why I drew it. It's right at the tip there. 150 exactly. And then you had more, and you had little ones here too. So there's a lot of puking here. So let's see if this can bounce. If not, then I stop out here onto my next trade. But that's what trading is. Not every trade you put on at any area that you're trading with, is going to be a winner. But I have a huge edge here, knowing this level, knowing that the stop run, usually it's not initiative selling, it's just guys puking. I have a very, very high probability that this can bounce off of here. If it doesn't, on to the next trade. So if you have an edge, it's, I talk about this in my trading webinars all the time. This is directly out of trading in the zone, right? So if you can learn how to trade these areas, if I can find the thing, I love showing this because I usually go on rants on it.
And Scott, if I can ask, obviously you've been using this for now just over a month, I think maybe in Bookmap very recently, how have the level helped you in some of your examples? I think you were showing me a couple the other day, but would really love to know how you're finding the edge on top of what obviously you're already doing with your strategy.
Oh, the edge is absolutely incredible. Here, I'll show you. This is not updated, but I had a bunch in here. Let's see here. That's not it. One of these. Oh, actually, there's my trading in the zone document I was looking for. Hold on. I actually have a. Well, first of all, before I get into that, this is what I'm trying to explain to you guys, right? So this is straight out of Trading in the Zone by Mark Douglas. It's so important that you understand this and you internalize, and not just read internalize. There's a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability, right? It's not 100%, but these areas, because of everything that's going on that we know about, you give yourself an incredible probability that the trade is going to work, and that's all trading is. So if you have one, you just keep putting it on, right? You have a stop loss for the day, obviously, because some days stuff just doesn't work, and you got to shut yourself off at, I recommend 5 to 6% of your account size. Don't go through that. But there's going to be days that stuff just doesn't work, right? It's just probabilities. But if you have an edge, and that's the beauty of this, or beauty of listening to me and my 25 years of experience, or Fabio with these levels, is you have the edge, right? That is the biggest thing that traders are seeking, is a real edge. Because most traders try something, they see something, I'm going to try this. It works a couple times, they think they have an edge, and then they lose the next 8, and then they're on to the next thing. You don't have to worry if this is an edge. You can take my word for it, right? And all my trading experience, this is the best edge I've ever seen with these SI events. And then you throw in another edge with the MenthorQ levels. Then you don't question it. You get the signal, you put the trade on, you put your stop on. If you stop out, on the next trade. Over 100 trades, 50, 100 trades, you're going to be a profitable trader if you have an edge, right? And that's the whole point. It's not, you take, like yesterday, I learned again, I was going to show you the heavy relative volume. I'll show you that. But I took a few sexy gexies with heavy relative volume, and it blew right through the area, right? But I didn't say, oh, this doesn't work. I just said, okay, well, what am I missing here, first of all? Because things are usually golden. I'm like, oh, it's because heavy relative volume is coming in. And when I'm referring to that, I use a relative volume this is the Sierra chart relative volume, right? So this is it's showing me the exact 5-minute period of that time of day, right? So earlier what I was showing you, then I'll show you some examples I was talking about here, is in natural gas, when I got run over here this morning, I did take this one. Where was it at? I showed my trade room. It was right here, right? So that was that sexy Gexy into that Gex 1 level, right? And I took it and I run over. I'm like, and I forgot to look at the relative volume. So again, the trade's a work in progress. My point is, pay attention to relative volume when you get to the GEX levels, right? So let me show you real quick here some examples that Fabio asked for. I had a list of them. Now I'm trying to find the thing. That's not it. That's not it. Sorry, guys.
Yeah, let me know when you find it.
All right, so in the meantime, while I'm looking for this, because they are some good examples. Here we go. Got it. 1 second here. So I don't like how this is just sitting here, by the way. I'm not going to do anything. I mean, my stop's in, but this thing should be bouncing off this level. You can see it finally did touch this put support. So let's see what happens here. But again, this is what trading is. You put it on. I have a distinct edge. If it moves lower, then I have another gamma level here. I have another gamma level here, plus my other areas that I look for. Hold on
Scott, I have also some question for you. How do you find the gamma levels in combination with the blind spots?
As far as the results of them,
Yes.
They work even better, right? When you have multiple on top of each other, those are the best ones, right? So you could even say, because I know there's some, you guys talk about removing some of them. Some people don't like to trade like X, 6 through 10 because they're less gamma levels. You can make the determination. I've noticed that when they're, obviously when there's more levels there, the better it is, obviously, right? It just makes sense. But yeah, I've noticed the blind spots are very, very good levels to be trading. I just wish I could find the damn examples here. Because a couple of them were at the blind spots as well. What other questions do you have?
No, that's good enough. So that was one of the reasons why we bring the blind spots to life. So.
Sorry, I was supposed to have this available because I wanted to show you guys all the examples, and I can't find the slideshow that I had. Just give me a second here while we wait for NASDAQ to do something. All right, I can't find it right now, so I'll keep looking for it. Fabio, you got any questions about?
No. For me, it was more like, now we get the move, right?
Yeah, so I'm not getting out of this until it can pop up at least to right in front of an ATR. So that's my rule right now. Again, this trade is very new for me, but I've introduced it again to my trade room, and I'm taking them just because it's a work in progress and how far I'm going to try to take profit out of it, so on and so forth. But it's just such a powerful edge. I'm not going to let a bunch go by and not trade them. So I'm getting out. I've got two full NASDAQ on. I'm going to get out of one right in front of this ATR, and I'm going to try to let another one run. And hopefully these SI events at this level propose this thing out. You could, if you got in here, you already got 15, 16 points out of it. I know these markets and I know these volume events, and majority of the time they will push at least an ATR out of here. So this is what I'm going to put this in right now because I haven't put it in yet. So I will exit one of these at, you can see they're down the bottom left, 21,479. So this is another trade we have in my trade room where we're taking the move into these for a move back to the volume event, right? So that's why these levels are here, but they're great exit levels for this trade.
Scott, for the people who have maybe not a Bookmap at the moment, do you have any recommendation for ATR on TradingView, what they can use also to maybe to get an idea what you're doing and then reach out to you after this? So I know the people, they want build what you was building now, look into this, and then reaching out to you.
Yeah, so TradingView, there are people using it in my trade room. I don't know how to bring up the ATR here. I know you can bring up ATR. It's very, I'm sure they have it. It's just a 5-minute while there's ATR.
Okay, 5 minutes. Yeah.
But you can bring it up on a Sierra chart here. So it's the same thing here. You can see the ATR. So right now it's a pathetic. Let me quiet this guy down real quick. By the way, we have the grain numbers coming out here too, so that should be interesting into the GEX levels. because you guys have soybeans and wheat that I've been watching too. Anyway, you can get the ATR on, you can see it right there. So right now it's 22.68, pretty almost exactly what the Thinkorswim ATR is on. So I have Thinkorswim, or you can use Sierra. I don't know how to bring it up on TradingView. It can't be that hard. I just don't use. The only reason I even got TradingView going is for the GEX levels. So sorry, I can't tell you.
Amazing.
Yeah. All right, let's see what's going on here. All right, I'm going to get out of one. Let's see if it could pop up there. I'm just going to get out of one here because I can't monitor it, but I'm sure it's going to tell you. There you go. So that, guys, this is the trade. Like you're from what I'm seeing. Like I was telling the guys in my trading room, guys and girls, last week, I have not had the kid on Christmas Eve feeling in trading, even though this stuff is incredible. As far as my mindset, right? So there's different types of traders, right? Most traders gravitate more towards the scalp trade, and it's just common sense because it takes a lot of conditioning to be able to sit in a position trade. And speaking of position trades, I got to get out of this at the spot because I'm still short NASDAQ here. I got to get out. This is the way I trade them. I'm getting out of this five. Let me put this in real quick so I can get out of these trades. But it takes a lot of mental conditioning to sit through the torture of the algos whipsawing you back and forth, right? And waiting for the trade to work. Sometimes it goes right away, but most times it doesn't. So most people gravitate towards scalping type trades, right? So my mind, I told you I was one of the biggest scalpers on the planet. It's because I couldn't stand this type of action. I wanted to be in, out, in, out, in, out. And trust me, if I can still do that, I would be doing it. It's just you can't do it against algos these days. This is the closest thing to scalping between the sexy Gexies, and then I have a reversion trade that comes back to the zone. So if you gravitate towards more of a scalp, this trade's for you. And it's an R trader's dream where you're hopping in the minute you hear the event at a Gex level, and then you play for your ATR move out of there and I'm going to hold one for a bigger move, but I already got out of one. So it's a scalper's dream, this type of trade, right? So if you can't stand the whipsaws, and not many people can, I'm conditioned myself after watching thousands of these things, but it's not easy. Trading is not easy, right? And you gotta be okay. You've got to be honest with yourself on what type of trader you are. Not that you can't become a different type of trader, but you got to do what's mentally comfortable for you. Not that trading is mentally comfortable, don't get me wrong, but you got to figure out what kind of trading style is for you. All right, are there any questions in here while I look for this damn slideshow? Are there any questions about what I'm doing here?
Let's see. Yeah, guys, if you have any questions, please send them over in the comments. I don't see any question. Let's see.
Guess I'm just such a great educator then, huh?
But this one was a great example, I think, how combining a lot of different tools, and this is kind of like similar to what, obviously, the reason why we also develop MenthorQ, because it's like really adding your edge to your strategy. So adding basically an additional level of confidence on maybe helping you in risk management. So if you're trying to take a trade, maybe like you shouldn't because there's an important level that basically is telling you otherwise. And similar to what you did, Scott, you were looking at a very, very important level, which is the put support 0 DTEs. And of course, 0 DTE option, as we know, have a really important importance in the daily flow. So I think that was a great example.
Yeah, absolutely. So my other question for you, again, as I learn these and understand them more. So as far as directional bias, if you notice, I personally notice, and it could just be, it's not an anomaly, but I don't have enough sample size. When the market gets below put support, do you tend to see bigger moves lower versus, if you do any position trading, do you look for bigger moves lower? I mean, is that a sign that the market could be moving much lower for you?
Yeah, so maybe I can go into what the put support is for those who are not, and then we have a couple of questions from Jordan. So first of all, let's go into our dashboard, right? So you were looking at NQ, if I'm not mistaken, right?
Yeah.
Okay. So basically, what we look here is the put support that you had was actually looking at the zero DT options. So you had this level right here, which is this wide red bar right there. This is basically today's expiration, looking at the largest negative gamma on the put side. And then basically this level was plotted onto your chart. So as we approach these levels, they can have two kind of reaction. One is like a reversal, so the price is moving lower and it bounces off the level and then reverses, or it could be an inflection point. So it could be that we're getting into a negative gamma environment, the price breaks through that level, and then suddenly it triggers a reaction, and then that becomes an inflection point. So that's kind of like how you would use those areas.
Okay. By the way, my
basically-
internet seems to be going in and out. Can you hear me?
Sorry?
Can you hear me?
Yep.
Okay, so my internet keeps going in and out of nowhere, so sorry about that. I'm still trying to find these. All right, so again, I got, I put on the sexy Gexy here. I got out of one right in front of the 5-minute ATR, and I still got one right. And so, go for a bigger move here. So let me show you some other.
Yeah, we've got a couple of questions. One is from Jordan. I don't know if you can see it here.
And Q1 validated.
Okay, so based on my stuff, like for instance, this is these events. Now, I mean, it was going off this last event. I could have combined them, but this was able to push an ATR out. So this is a bullish event. The way I view the markets and how I know how these markets react when they're able to push an ATR out. So I am short from this morning. And I trail my stop. This is how I trail my stops as well for my position tradings. I trail to this ATR just outside of an ATR. So if this trades 84.25, I'm out of my shorts. More importantly, this is a bullish event, and I'm still long, again, one of the sexy Gexies. So let me find the question here.
Then we have another one here. What kind of risk reward do you have when you use ATR plus MenthorQ levels?
The risk reward is incredible for the sexy Gexy trade where I'm entering right away, right? So because I'm entering right in the zone, most of my other trading strategies, almost all of my other trading strategies, I'm demanding a move out of the zone. So for instance, I took this position trade on my webinar. It was a move. So these are my inflection zones that I draw, right? It was a move in the volume event was into remember I talked about important areas, just like the MenthorQs are important areas. Well, this is my area and this was the bottom of this balance. Anyway, I took this trade. For those trades, I demand the market moves outside of the zone, the ATR. This is my entry, and then this is my exit. So the risk reward is reduced because I used to get in right away, and I got burned so many times. I'm like, that's not the way to do these for my position trading, right? Up until MenthorQ. Okay, I just stopped out on my shorts at that level. Until MenthorQ came along, it just was not worth just jumping in when you heard the event because you would just get it wasn't accurate. So up until MenthorQ, I would wait for this thing to push out. So my risk reward was reduced, but it was a much higher percentage trade. You see what I'm saying? With the MenthorQ levels, I don't have to wait for it. So you can see the risk reward. So for instance, I got in this trade, this short, at 21,600, right around there. For my position trade, I waited for this thing to move almost 50 points out before I entered. So you can see right there, that's 50 points of difference. Yeah, it's a great risk reward. I wish I could get in all my trades like this, but I've just determined from my other strategies, it's better to wait for the ATR. That's what makes the MenthorQ, the sexy Gexy trade that I do, so much more, appealing from a risk reward standpoint because I'm hopping in right when I hear the event. So, again, I risk. So, for instance, this is on my trading webinar. I'll probably post this later on my YouTube, on my Twitter and YouTube as well, just so you can see what I did here. But I took this trade on my live webinar, and this was my stop, right? So this is a clear-cut way. What is that? Again, we talked about this. This is an ATR plus 15%. I'm going to be wrong on this MenthorQ level and the stop event, aka the sexy Gexy trade. I'm forcing this thing to push an ATR and 15% out of the zone for me to be wrong. So for this one, I was risking about
307.
I was risking by the way, the gray number's coming out right now. I was risking about 28 to 30 points. And I got out of one for 30-point winner. Actually, it was close to a 50-point winner. And then I held another one all the way down, and this was a 75-point winner. So this one was like a blended over 2-to-1 trade, 2R trade. Right. So It depends on where the ATR is, but this is all clear cut for you where you don't have to guess. Like with the zone drawing tool, you don't have to guess where to enter the trades because you got your gamma levels and you got multiple here. Right. This is going to get really annoying, guys, because the numbers coming out and stuff's going to be whipping around in grades. But you don't have to guess where to get in. You wait for your MenthorQ levels. You wait for an event. You wait for your MenthorQ levels. You wait for an event, and you jump in. And there's your stop. There's your stop. And then the only real question mark, that stuff's clear cut. The question mark is where do you get out of the trade, right? That's work in progress for me. Right now, I'm getting out of some like you saw. I'm just the ATR move out, and then I'll try to hold for a bigger move. That's the great thing about the volume events is you can usually expect a bigger move because this is concentrated volume. You already expect the move because of the dealer hedging, but now you got concentrated volume. This could propel this thing like this one down, right? So that's why both used in conjunction, it's one of the best edges I've ever seen. So what I was getting at before, like a kid on Christmas Eve, I can't remember the last time I was more. I mean, I already know I have an edge. I'm a profitable trader, but I haven't been this excited since early 2000s when I figured out, like when the light went on one day, like literally my first 2 months of trading, I lost every single day. I was about to get fired from my firm. And then the light went on. Well, this is like that feeling when I'm seeing these things just bounce and bounce and bounce off these levels of volume events. Very exciting stuff.
Nice. So we got, before you maybe show some of the example, we have questions about your settings on Bookmap.
Yeah, let me see here again. If you can read it to me, it's better because then I can keep looking for these damn examples that I'm trying to find.
Yeah, so you can go through your settings on Bookmap. So like, how do you set up? What is your typical setup on Bookmap?
Well, settings for what? The SI indicator for
yeah, what? I mean, I would imagine, yeah, what indicators do you have and what?
So the other, I don't really want to get into the other stuff because people are probably already confused just with this stuff until they understand it. But you got the market pulse also is an incredible indicator. That's part of the MBO add-on. But the main thing I'm using here is the stop iceberg on chart and sub chart. So the sub chart's what you're seeing there. The on chart that actually needs to be running too to help the zone drawer tool. But the sub chart, my settings. So again, when I was talking about thresholds, right? So I go over all these in my course too, but they're all part of the zone drawing tool. So again, for NASDAQ, I demand 150 contracts or more for stops and icebergs, or else I don't trade that area. This is a threshold that I deemed after watching literally tens of thousands of these setups. That is the best amount where it's a tradable event, right? It's worthy of your trade. Well, different market, different sizes, different markets have different volume thresholds. ES, I demand for my stops, I demand 500 and I demand 700 for my ICE, right? So if it's 150, I don't even look at it. It's 500, and that's the great thing about here, about the SI, the subchart stuff, and the zone drawing tool. It announces when it hits threshold. So now I can turn my attention once I hear the voice, as long as you have the voice enabled. And then the only thing setting-wise is I have my stop set for 10 seconds. That's probably too long. Stops are pretty instantaneous, but I give it 10 seconds to develop. And then I set my icebergs for a minute because icebergs tend to be traded into to be triggered the maximum event. So actually, I should have drawn a zone here. Sometimes you got to draw manually, right? And that's the other great thing about the zone drawing tool, because the subchart or the zone drawer and the subchart, the announcement, it picks it up if one event hits its threshold. So for instance, this one was 526, so it's not going to announce it, but it splits off at the minute because I have it set for a minute, right? So at the minute mark, it splits off. Well, you can see there was more here. There was another 200. So these two combined were 700. And then you had even more here, another 4. So you had 1100 here. If I was watching this, which I should be doing, I should have known this was an event here. So the great thing about this iceberg tool, you can draw this manually. I mean, the zone drawing tool. So I should have drawn that. I don't know if that's exactly accurate, but you can see how the market hit this. Well, a couple of things happened here. One, it hit this buy ice, meaning these sellers, these aggressive sellers, ran into a mouthful of buy ice and said, oh, crap, puked them out, right? And then the other tendency, these are other trades that I do for my room and for myself. These are called reversion trades, and they're even better when you bounce off a GEX level and it comes back to the event, right? So that's called a reversion trade. So this is where you can say, all right, here's an iceberg event. Nothing happened. All right, you know what? I'm going to blindly take these shorts. So I don't take them right when they touch them, but I take, it's called a reversion trade. This is what these dotted lines are. I'll take, call it the backdoor reversion, where I take the 3 ATR, the 2 ATR, the 1 ATR back to the zone, and I'm out. Again, this is a whole different trade. I don't want to confuse people here, but the point is, you can see how using GEX levels, this is a different variation of using GEX levels. We were talking about waiting for an event, Adam. Well, this one, you can wait until it tags them, starts to fail, and this is where you can use market pulse. I'll just show you, if you guys want to be confused a little more. I guarantee this was a price change algo, right? So look at this, right? So you would be amazed on how accurate this stuff is. When nothing's going on, every time this thing spikes, the market reacts. Spikes, market reacts. Spikes, market reacts. So you can see, you can wait. So say you're waiting for an event here, an iceberg event, but you don't get it. But you say, you know what? It's a dead time of day. I'm on Pacific time, by the way. It's a dead time of day, or Mountain time. Sorry, not Pacific. It's 1 hour behind Central. That's Ethereum. I'm not going to cover that right now. But anyway, you say, oh, here's the price change. I'll go at a GEX level. I'm going to give that a shot. And I'm going to give that a shot to come back to that event. You would be amazed at how, again, we have a trade for this, how these markets come back to these concentrated volume events, right? Just like markets like to travel to liquidity. Well, that's just big orders in the order book. They travel back to these algos for some reason, snap these markets back to these events. It's unbelievable. That's why we have a trade for that. So my point is, you could have taken this GEX trade, shorted up here, saw the price change algo firing off, said, I'm going to give that a shot, and then play it back here. And you could have maybe risked like like we were talking about, a 5-minute ATR. Well, that did not move more than a 5-minute ATR, very unlikely. I don't know what it was at the time. Actually, I could tell you. But the point is, you can risk an ATR just outside an ATR like I do, and then play it back to the zone. So how good was this trade? You were risking, ATR was probably 3 or 4, so 3 points, 3 or 4 points to make, 15. That's a good risk reward. So hopefully, is that what he meant by settings about the SI indicator?
Yeah, I think that was great. I don't know if you have any question on your side, Patrick.
For me, I think it's really cool again, Scott, because I think it's you show us that you use at the end your edge, your strategy, and you combine this with our MenthorQ levels and with the blind spots, and this is what we're teaching the people all the time. So bring MenthorQ in your system and see how MenthorQ can support your trading edge, your trading strategy, and you are really amazing guy and trader. So we're using this and doing exactly this, and I love it.
I'm so amazing. I actually found these examples. Sorry, I didn't mean to interrupt.
So a big shout out to Jordan.
I finally found the damn thing. Here we go. So the search box in the drive is actually this incredible thing that I didn't think about using, but found them. So there's just a couple examples that I'm compiling, right? So this was in ES. This was last week. I think it was Thursday or Friday. Market moved in. Here you go with the, sorry, I haven't blocked out what they were, but this is like a blind spot and another one, right? Here you go. Sell ICE right into the GEX level. Get in right away. Quick 10 points, right? And then let's see what else we got here. This one was soybeans. So this is great. This is why I love MenthorQ, because you get these levels for all these. I'm watching 20 futures products. I want to know. I feel like I'm costing myself. I'm not, knowledgeable of events or these MenthorQ levels and events happening in these levels. So that's why I watch so many different markets for my trading strategy and MenthorQ. But you can see here, market came down. That was right here. It was right in this area. Put support 1-day minimum. Buy ICE. There's your move, right? Again, you can get out of some that's hit the 1 ATR, the 2 ATR, and it hit the 3 ATR as well. So you can use these to help you get out for the quick reaction. But the point is, it's more likely to go further away. We already know the dealers are going to hedge there. But then when you know there's big buy ICE behind it and aggressive sellers there that ran into a mouthful of buy ICE, you can get bigger moves, right? So that one was awesome. This one was NASDAQ. Here you go. Buy, stop, run, which is usually the dumb money puke. Right into the blind spot 1, the GEX 6, sell stops, you jump in. I don't know if you like a quick 40, 50 points on that one. No heat whatsoever, right? Risk an ATR above. I don't even have the ATR line on there. It didn't matter. It was immediate winner. That was something else from that day. Here's another ES. I mean, look at these guys. I mean, again, you just keep taking them because, especially if there's no heavy relative volume. I mean, these things are, I don't know the win percentage, but they're ridiculous. Sell stops into, once again, multiple levels. X1, blind spot. Sell stops. Jump in, boom. This one kept going, by the way. This one was like a 40-pointer that day, 30 or 40-pointer. But you can get out of one at the one ATR and then let one ride because you know it's a concentrated volume event. What else we got? Another one. Came down, sell stops, jump in. You can get out of one here. Here's your retest. We have a trade for that, and then off to the races. That's it. There's a bunch more. I just haven't got them on the slideshow yet. But I could probably find 10 from the day alone. So another one you want to be watching here too is here's crude oil. It's sneaking its way up here, right? So watch these levels for either sell ice. So another thing too, you don't want to be taking, I don't take these. So say this market moves up and I see these all the time because we're looking for dealer hedging, right? So you want to use these as fade areas. So it comes up here and you see buy ice. I personally won't take it, right? I'm not going to, yeah, dealers are hedging, but you got big money buying here with the buy ice. I'm not going to take that fade. I want to see either sell ice or buy stops into these areas. So you want to know these areas. So when it fires off, you're ready to jump in them. So keep an eye on the 69.25. You got one here. You can actually take this one. I've seen this again. I'm very new to trading this one, but I have noticed if the stop run's not right at it, but it tags it. We just took this one in NASDAQ the other way. I'll show you again. You can just jump in it and play it. So I should actually be short this one, right? So because it tagged it, you got the buy stop. Put your stop right there. If you get stopped out, fine. Very small risk for this could turn around and get smushed. But this is exactly what I did in NASDAQ, right? It didn't at the time. It was before this one fired off, this last one. But it did. The stop wasn't exactly on the GEX level, even this one. But it tagged it. That was, you got your volume event. You jump in. Boom. I mean, it's one of the best edges I've ever seen. The stop iceberg event's the best edge I've ever seen, and you throw the GEX levels in there. Holy cow. The reason is because dealers are going to be hedging there. So it's not a guess. Like any other level you're using, whatever line on a chart you think is magical, you just got to hope that, some other traders are thinking the same thing and want to participate there. With the GEX levels, the dealers have to hedge. Dealers are not directional traders. They have to hedge. So you're going to be getting their participation. Does it mean it's always going to rip off the page? No, but at least that they're going to be there. And then when you throw in an iceberg event or stop event, now you have that additional confirmation. And it's unbelievable.
Wow.
Take it from me. I've watched a few trading events in my life, so you might want to listen to me.
Scott, I have one question. If you allow me.
Yeah.
So I think we have many day traders here in the call, who are maybe prop firm trader or what else, or they're trading his own capital or having some challenges. What is your biggest piece of, I think, friendly advice, no financial advice, when it comes to the algos? So don't beat the algos, or what you can tell them about the algos, because there are so many bullshit outside when people speaking about the algos and all this stuff. Maybe you can give them some advice about this.
Advice about what about the algos?
Yeah, don't fight the algos, or how you can deal with the algos. You were showing us your strategy, what you're doing. But I think it's also a really good way and healthy way for the people outside to speak about the algos. How is this healthy for a scalper or for a day trader to trade against them, or like what you were showing us with your stop loss and risk management and risk reward, how wide you have to be your stop loss based on your RTR zones and all this stuff.
Right.
But we was seeing this very often. I'm doing this also many times, so that you say, okay, I'm using 10 points stop loss to making 30 points or something like this. But what would be your advice about this for people who be new in the games? They're following stupid traders who talking about the algos and all this stuff.
Right. Well, you've got to just accept algos are 80+% of the trade in the markets, right? Like the algos run the show. So it's, for years, and I came from my background before I even went to the screen as a trader. I worked at the Chicago Board of Trade. I was an ARB clerk, right? I can't tell you how many traders, because they got knocked out because the floor died, right? There's no floor traders anymore. Very, 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 very few. They had to go to the screens. Well, there's even a documentary out there. It's on the Board of Trade. Google it. It's actually a really good documentary. Well, a lot of these floor traders tried to go onto the screens, and they're like, "This is impossible. I can't trade with these computers." And I was one of those guys. I told you that algos knocked me out of the game. I was a multi-million-dollar trader. I thought I had it made. Thought I was set for life. All of a sudden, overnight, couldn't make $1. Right? I was one of the guys like, trading's impossible. You can't play with these algos. But you can if you understand what they do, when they do it, why they're doing it, right? So, and how to position your trades where you're not going to get algoed out. So again, back to the R stuff, like most of my trading, I'll get in, I'll wait for the trade to move the ATR outside, and then I put my ATR on the other side of the zone because I know, you're looking at it right here, and I'm going to show you something that's going to help ease your pain in understanding the stuff, especially this type of day, why it's doing what it's doing, right? Because, this time of day, like I said,
Yes. 700
right, we got an event in ES. Let's just quickly look, and then I'll get back to that. Let's see if we got a level here. So this is that area earlier. So this one is threshold, right, by itself. I'm not seeing, do we have a GEX level here? No GEX level. Let me just double check in TradingView because, again, I know my chart starts. There's a lot going on that chart. Let's see here. Yeah, no level here. So nothing for me to do with sexy Gexy here, but especially this time of day, right? I was telling these guys before I got on, Patrick and Fabio, before I got on, that I've lost millions and millions. Well, first of all, back to the advice for algos, you would be very, very, very wise not to trade. I mean, until this stuff anyway, till the sexy Gexies, but between 10:30 and 12:30 p.m. Central, I have lost millions and millions and millions of dollars because this is when algos go full force. Think about it. New York goes to lunch, the big traders, the big money, right? The big houses, the funds, all that stuff. They go to lunch. Then Chicago goes to lunch. This is the time of day that I got my ass kicked. I would have to physically remove myself from the office so I wouldn't trade at this time of day, right? Because it just makes sense because they turn on the algos. Algos are full force at this time of day because they know they can screw around with the market because there's no big money in here to run them over, right? So, most, even with sexy Gexies, I'd be careful trading this time of day. This helps fight back. But the point is, you're going to go through this a lot more at this time of day. But my advice is, one, understand what these algos are trading around and what, how they trade. And, so many of them are trading in the ATR. So again, when I enter position trades, I'm forcing this thing to push out an ATR and the other way for me to say I'm wrong on the trade. A lot of traders groan, that's too much to risk. I don't want to risk that. Well, the beauty of the zone drawer too is you can put your capital in. For instance, on some of these trades, I'm risking 10%. That's way too much for a regular account that you're trading. Usually you're risking about 2%. But the point is, all you do is adjust. You're adjusting to the volatility with this stuff. So you just change. If you're risking more R, you're just going to change your size, right? That's all. But for those of you that love to just jump in, then fine. Just know you're going to have probably a lower winning percentage. The other thing is understanding what these algos are trading off of. So even if you're not trading this, or say you're not scalping this, right? So when I bring up the price change here, I guarantee I know what I'm going to see, right? Because it's just nonstop. Like, look at this thing. Every time this is the market pulse price change, and I have this set. So talk about settings. I use two different these market pulse. So I was telling Fabio and Patrick as well. Bookmap actually built market pulse for me because I wanted to see a different version of it's called tick strike. I wanted to see a different version of it, right? And where you can see history and what happens when the thing was making, there's a bunch of buying or selling, so on and so forth. So anyway, this volume pressure imbalance, the price change algo. I'm just using the default settings. So it's set for 5 minutes. I don't change anything here. The volume pressure imbalance, and I'm not going to get into that right now. Again, I know there's already confused enough traders. I changed that to an hour. But back to my original thing, if you understand what these algos are trading off of, even if you're not like trying to take advantage of it with trades, say I'm long, I am long here. This isn't surprising me. Look at every time this thing did the price change, swipes down, price change, little blip there, another price change, swipes down, another price change, swipes down, price change to the downside, swipes up. So even if you're not trading this, at least you can keep your sanity understanding, oh, this is just the algo games playing off the price change. And you can definitely, you can trade this too. You got to be fast, right? You're going against algos. You got to be able to, and you know, again, one time the price change is a few points, another time it's like double that. That, you know, varies, but you can imagine using this information as well at the MenthorQ levels. So you get this move. I'm getting bad feedback, by the way, from one of you guys. I don't know what that is. Bad microphone feedback. The market comes down to these levels. Say you're not even using the SI indicator. Well, you're like, hey, that's a price change. I already know the dealers are hedging here, and I know the algos love to snap it back there. I'm going to jump in here. I'm going to try to trade for 1 ATR and get out. Or what you can do, wait for the level, wait for the price change, wait for an opposing price change, and you're out of the trade. So these are all different ways you can enhance. You know, you can come up with a trading style system using what's really going on in the market, not some, you know, line on the chart that you don't know if people are going to be participating in, right?
Yeah.
Amazing.
That's the key. If anything, use this to keep your sanity, so you don't jump out a window when you get whipsawed 85 times while you're in a trade.
And Scott, you were saying, okay, it's a bad time to trade around this time because the algos are in the game. So on the other hand, what's the best time to trade?
The best time, obviously, is not right at the open, but I'd say 5 to 10 minutes after the open. You get a lot more cleaner moves, and you're not going through this nonsense, right? Very many times, you get more extended moves. And then so I do my live trading webinars. I get on right before the open, and I trade till about 9:30 Central, and then I get back on around 2 o'clock. That's a little late. 1:15. I say 10:30 to 12:30, but 1 o'clock is probably safe enough where the big money's coming back in, and this is if you're positional trading too, right? If you're looking for bigger moves, if you want the whipsaw scalp stuff, then you can trade anytime, because this is the prime time for it, like I said. But I'd say after 1:15 Central is a good time to trade too.
You would also trade not the New York time, also the London and the Asia time. You was trying this also.
Yeah, you could trade this stuff as well. I recommend, as long as the relative volume is normal. If it's crazy, then you want to use regular thresholds. But my rule of thumb, I get that question all the time, is if you want to trade overnight, if you see a threshold event like a zone drawdown event overnight, they're even more golden, because that means that's a lot of volume for overnight. But if you're gonna, if you're watching these, and you can actually change the thresholds too on the zone drawer. You can change it from overnight trade too. So you go here, and then go down here to advanced. Look at this puppy, right? So you can change them to whatever size you want. So overnight, you can change them I recommend half size. So change your thresholds on that thing for overnight, and it will actually draw the zones for you. But if you're doing them by hand or eyeballing the SI events, usually half threshold. So again, I said 150 is a lot for NASDAQ. You can use 75. I said 500 for icebergs or for stop runs, 700 in ES. So use 250 to 350. So that's a rule of thumb. But you want to be careful. Make sure you're not getting something like this, where you're seeing this heavy relative volume come in, right? So, and it happens all the time. I'm talking about a 5-minute chart here. By the way, I'm still long that sexy Gexy and then Q. Like for instance, overnight here in natural gas, you can see there was something going on here, right? So be careful using half thresholds when you're getting this kind of volume overnight. I have mine set for if it lights up yellow if it's 200% or more. But if you're getting this kind of trade and you see a regular event like this kind of relative volume, then it's very, very significant. So hopefully that makes sense. By the way, guys, do you see here how I didn't panic out of this long? Do I like getting whipsawed 85 times on this trade? No, but I understand what these algos do, especially at this time of day. I'm still in that sexy Gexy long. I got out of one early, and I'm trying for a bigger move out of here. Right? But I don't let this. Don't get me wrong. I will still bitch about it throughout the trade. Ask my trade room, but I don't let it shake me out of the trade. If this market could push this ATR out this way, then I say fine, on to the next trade. Other than that, they can play games for the next 4 hours. I'm staying in this trade. But you see look at this thing. Look at the price change algo right now. But if you just know this information, you're just not losing your mind, right? So that wouldn't be surprised me this pullback again. Here's another price change. You got to be careful if you're trading this though, right? So you're like, if you're watching this webinar, you're like, oh my God, look at this thing every time. I'm gonna trade all I'm gonna do is trade this. Guys, this thing can price change for 100 points when big money comes in here. So it works until it doesn't work. And these algos do the same thing. They're trading this. They know there's going to be times when someone comes back from lunch and they want to buy 500. This thing's going to price change for 100 points. So you just got to accept you're going to get run over sometimes, but 80% of the time, this is what goes on.
All right. Amazing. Thank you.
It really is, guys. If you can understand the real-time order flow, these events, what the algos are doing, and then you throw on these MenthorQ levels, I mean, I don't know what else you want in your trading. I really don't. I don't know what else you need. You don't need anymore. I've always said the simpler you make your trading, the better you're going to do. That's why I was a scalper. When I was scalping, all I would have, believe it or not, was the order book up. I didn't have charts. I didn't have anything. They didn't have any of this stuff back then. I would stare at this. That's all I would trade up. You can't do it now. Trust me, I'd be doing it. I can't do it because the algos run the show. Back then, there were no algos. So I would just watch how the market would react to the order book, right? So it doesn't get much simpler than that. And I made millions of dollars. I made $15 million for my trading firm and myself over a 3-year period, right? 4-year period. So my point is that I'm not bragging, right? It's what have you done for me lately, especially in this business. What I'm trying to tell you is I made that much money just staring at the dome, at the market. So don't think you have to add a bunch of crap on your chart to make money. All you really need, you can literally just take the MenthorQ levels and SI events. I guarantee you'll be a profitable trader if you follow your rules. It doesn't mean, it means following rules, you don't lose 3 in a row and then pass on the next one and then watch it rip off the page. How many traders do that, right? So again, play the probabilities. You don't have to, my point is you don't have to guess if there's an edge here. There is. Please believe me.
Nice. All right. So I think, Scott, this was awesome. I think we probably want to do more of these because this is a real example of what we are also trying to show, which is really adding an edge to what you are already doing, but having an additional point of risk perspective of some of the levels that could come in play, coming again from looking at the option market, which is where the hedging is coming from. And then we now integrate it into multiple applications. We saw today the Bookmap integration. So here you can find all the details about it. And again, this is a great integration because it's automatic. So it's done through APIs. So again, you just type in your API key, you come into the system, and the levels will be automatically updated like Scott showed you, so which is great. And then also, if you go back here, we also have other integrations available for you guys. So depending on, you mentioned Sierra Chart, we have that one as well. We have NinjaTrader, Atas, Bookmap, Quantower. So we have a lot of those, and those are going to keep coming. And if you want to find us and learn more about us, you can go MenthorQ.com, and you can also create a free account, and you can get access to a lot of the documentation, all our guides, and a lot of free stuff. So,
right, and also, guys, for the Bookmap, just go to my website. You get discounts to that. You get obviously discount for the MenthorQ stuff, and then all these banners are discounts, and this is everything I'm using in my trading. So, go to my website, you get that. And then you also want the MBO. There's not a discount to that, but that's on the marketplace. You got to have this to get the SI indicator. So go to MBO bundle. So you do need, this is what you need to get that, right? You need a rhythmic, or you need the, I believe you can use the Bookmap data now too, but you got to get this. And this is everything. This has all the stuff I just showed you, the sub chart, the on chart, market pulse. I was just showing you that algo. But you need a data feed that has the MBO data. Believe it or not, there's only 2 on the planet that have the MBO data, which makes no sense to me, right? Because it's the enhanced data that you need to have the best edge that I've ever seen. And you need, so you can get the rhythmic data feed through Bookmap. Again, there's confusion on this too. If you're only trading certain products, you pick individual, but if you want them all, you just pick the bundle, right? It's the cheapest. You pick non-pro or pro, whatever you are. It's obviously a huge difference, right? But if you go individual, then it's 40, 40, 40. You save money if you do the bundle, And I highly recommend you watch all these markets as many as you can, because you're getting opportunity across the board. But you need to get this. That is the data feed that powers the MBO or the SI events.
Yep.
So you got to get that. You can get it through your broker too, but you can get it on Bookmap.
All right. Thank you. Thank you, Scott. Thank you, Patrick, as always. And yeah, this has gone over an hour, but it was amazing. And thank you for being part of it and for sharing all these examples. And look forward to see you again soon, I guess.
Sure. Thanks, Fabio, for having me. Fabio and Patrick, appreciate it. Thank you.
Bye-bye.
Bye.
Bye.